me today, I have Peter Michaelis, who runs the Liontrust UK Ethical Fund. Hello, Peter.
Hi, Neil.
Ethical investing has come a long way in the past few years and is more popular than ever. Why do you think that is?
Well, I think finally people are making the link that the way they invest matters and it affects the world. And so just as people bring their principles and into how they shop, the sort of type of food they buy, where they decide to buy their clothes, so people are bringing that into the investment world as well, where they have an equally important role to play.
Okay, and I mean, do you still hear the argument that investors have to sacrifice returns to invest ethically? That was always the argument against ethical investing. I mean, or has this idea, do you think, finally been dismissed completely?
Well, I don't think it's been dismissed completely. I think that there are still a lot of people out there who think, okay, if you're bringing your principles into investment, you necessarily will reduce your available universe, and so you will end up somehow constraining your performance. The evidence is totally to the contrary, and when I look at our funds, and if you look over the last 10 years, all our funds are in the top quartile. When I look at who our competitors are in the sort of top 10 performers, and this is versus mainstream benchmarks, when I look at who our competitors are, there's a high prevalence of sustainable strategies as well, and the reason for that is that sustainable strategies are investing in those companies which are benefiting from the changes that we're going to see in the world. So in helping to make our businesses which are helping to make our world cleaner, healthier, safer. Those are the businesses which are the sort of focus of sustainable strategies. And those are the businesses which grow faster. And we believe, certainly, that the market tends to underestimate that. So we've been running these funds for nearly 20 years now, and we have demonstrated that we can outperform mainstream strategies and mainstream benchmarks consistently based on this investment approach. So no, there's a huge number of people out there who continue to be very skeptical about it, but we are very happy that our clients are enjoying strong returns by investing in line with their principles. And to me, it's a common sense way of investing. You invest in the way the world is going to be, not the way the world has been in the past.
I mean, you've touched on this already, but definitions of exactly what ethical means have become clearer in recent times. I think some investors are still sort of confused about exactly what ethical investing, or ESG, environmental, social and governance investing, really is. How does your fund define ethical?
Yeah, I mean, our fund invests positively in companies which are aligned with those strong structural trends of our world's developing to become cleaner, healthier and safer. So our clients understand that the performance that we generate comes from those businesses being successful. So helping to provide pollution control equipment to clean our air, to provide vaccines to help us fight diseases, or to provide cybersecurity to keep our lives online safe. So we can show our clients where their returns are coming from, and they are comfortable that it's coming from companies who are helping to make the world a better place. That said, we do also, because of our focus on the positive, we avoid companies with high negative costs on society and the environment. And that includes companies in tobacco, in arms manufacturing, in fossil fuels, so all coal, oil or gas, or gambling. And these companies tend to have high external costs on society, and we believe that they have a more challenged future in terms of the growth of their industry. So our funds are a combination of that, positive focus, but also avoiding sectors which we think are not great investment areas, but also which our clients do not want to be invested in.
Okay. And looking at the fund's top 10 holdings, some investors might not immediately understand how some of them make the portfolio. They seem very traditional companies. Perhaps you could explain what makes some of them an ethical investment.
I mean, some are pretty obvious and stand out. So a company like Kingspan is one of our largest holdings. Kingspan make thermal insulation for buildings, which improves energy efficiency and has led to that company being incredibly successful. It's grown over the last 25 years. It's grown its sales more than 15% per annum on average. So phenomenally successful, very obviously a sustainable company. It saves the equivalent energy to what London uses, 4 times what London uses every year through the use of its products. So that, as you say, is very straightforward. Others, which are maybe less obviously sustainable, would include Prudential. Prudential is a large insurance company. It actually now operates in the US, where it does annuities. But the most exciting bit, the bit that we really like, is their operations in Southeast Asia. Now, to a lot of people, they sort of think, oh, insurance, that's just a chore. It's not anything particularly sustainable. But consider living in a world without insurance. If you don't have cover in the event of your death or injury, or you don't have health cover, you're in an incredibly precarious position. So in Southeast Asia, you have a very underpenetrated insurance market. And this means that when healthcare spend in Southeast Asia, more than 40% is done out of pocket. So you pay for it yourself. And compare that with the UK, where it's about 9%. It's under 9%. Obviously, we have the NHS, but we also have great health insurance. And so by increasing the penetration of insurance within those societies, people can plan for the future. They can mitigate risk. So insurance basically is a great way of sharing risk through society. And so we see their growth in Asia of insurance products, principally life insurance and health, being something which is amazingly positive from a societal point of view. So, far from being boring, it's something which we think is incredibly important and a very positive long-term trend. And just finally on Prudential, before I move on to one more, I think if we look at a world post the Corona and COVID-19 pandemic, people are going to be a lot more focused on thinking about their future and thinking about how they can mitigate risks for themselves, obviously directly, but also for their families. And we think the insurance sector will play well into that. One other one, if I may, is one of our larger holdings is a company called Smurfit Kappa. Now, Smurfit Kappa is not a brand name, but they make the packaging for a lot of the brand names that we buy. And what's important about them is that they make cardboard packaging. And card is an amazingly sort of versatile material. But what we really like about it is the circularity of that material. And more than 90% of card is recycled in Europe. Smurfit Kappa's products, when they package goods to sit on the supermarket shelf, they have more than 3/4, more than 75% comes from recycled fiber. And the really great bit about it is that, in contrast to plastic, that cardboard which leaks out of the system, that 8% that isn't recovered, biodegrades very quickly. It's a natural product. So we think that as we learn more about the harm that single-use plastic does, and the very, very low rates of plastic recovery, and it's around about 40% in Europe at the moment, So consumers say, actually, I prefer to see my product packaged in cardboard, where possible, and so that will lead to further growth in demand for Smurfit Kappa's products. So those are a few examples of companies within the portfolio that we feel are very sustainable and will benefit from those trends towards this cleaner, healthier, safer world.